Let's get cracking with our first share, which is Asian Paint. So today we have seen a downside of 2.19%, and if I look at 1 month return, it's flat, and 6 months return, it has provided 18.67% return, and if I look at 1 year return, it has given a negative return of 5.6%. But if I change it to 5 years, you will see that in the period of 5 years, it has provided around 169% returns to its shareholder, and in the long run, it has provided 25,674% return to its shareholder. And you can look at its chart. The chart is also very good. This is a sign of a consistent compounding share chart. And consistent compounder share means that these shares or these type of companies give you consistent return year on year. When I say year on year, it's not that every year it will give those return, but in the period of 3 years, 5 years, 10 years, you will see consistent return from these companies. So these companies generally will double your capital within 3 years time. This is a blue chip company, and the risk associated with this company is very less. And why it is very less is because of its business, because of its market dominance. So this company is the largest paint manufacturing company in India, and in Asia it ranks at number 3, and in the world it ranks at 9th. So it's a very big company, and it has been the largest paint manufacturer in India for more than 50 years now. And apart from being the market leader, this company also has a market share of 50% in the organized domestic paint market in India. And this company is also exploring new areas like kitchen business, bath business, and recently they have forayed into the home decor business. And now I'm at the P&L of this company, and let's look at last 5-year numbers. So if we'll start from 2018, you will see that the sales were around 16,800, which increased to 19,000, then 20,000, then 21,000, then 29,000, and now in the 12 trailing months, it is around 33,000. So you can see that sales is continuously increasing. If you look at the operating profit, in March 2018, it was 3,200, then it was 3,700, then 4,100, then 4,800, then it was almost flat. Why? Because the OPM of the company was reduced from 22 to 17%. So what is OPM? OPM is the operating profit margin. And why you are seeing a dip in the OPM percentage is because the expenses of the company increased. And why the expenses increased, that we all know, because of the high oil prices, because crude oil is one of the raw material for paint industry. So this was one reason, plus inflation was another reason, because of which you are seeing a pressure in this share price of the company. And for the 12 trailing months also, you'll see that the OPM is around 17%, and that is the only reason you are getting this share at a discount. This inflation problem and this crude oil problem will go away. It has been there in the past also, but this company has been able to manage it and has been able to increase its sales and OPM, and this company has the full potential to do that again, and it will again reach its previous OPM, which was around 21 to 22%. But when it start doing that, you will not get this share at this price. So here you can see the sales growth of this company, and in the last 12 trailing months, you'll see that the sales are growing at a very good rate, but only because of the high raw material cost, the profit are not increasing that much. And here you can also see the profit growth. It's in the double figures. If you look at the CAGR, you can see that in 3 years, 5 years, and 10 years, it has provided consistent return of 22 to 23% to its shareholder. Only in last 1 year, you will see that the returns are not there, and that's why whenever you buy a share, you need to hold that share for minimum 5 years for that company to give you good returns, because within those 5 years, company will go up and down due to various reasons, be it COVID, inflation, high crude price, whatever. But over the period of 5 years, it will definitely give you good return. And the return on equity also, you can see it's in double digits. Now we are at the chart for Asian Paint, and you can see that this company made a top at around 3,590 level, and from there it is down now, and it is taking support here at this level, and earlier also it has taken support at this level around 3,050 level. So this is its strong support, and right now from its top it is available at around 14.7% discount. And in case you get this share at a much lower rate, and if market gives us that opportunity, then you can invest in this share at every 100 level. But right now also it's a good opportunity. 14-15% discount is not bad at all in a market leader company, in a consistent compounder company. Our second company from the same sector is Berger Paint, and this share is down around 1.4% today. And if I look at 6-month return, it has provided just 6% return to its shareholder, and in 1 year it has given a negative return of 20%, and in 5 years it has given a very good return of around 130% to its shareholder. And if I look at the maximum chart pattern, again you'll see a chart pattern of a good consistent compounder. It has given 34,400% to its shareholder, and right now you'll see that it is down from its top, which we should see as an opportunity, because this also is a very good company. This is the second largest paint company in India and the fourth largest paint company in Asia. This company in the industrial segment is the market leader in the protective coating, and protective coating is used in many areas like automotive and appliances, these kind of thing. And Berger Paint has clients like Tata Motors, Ashok Leyland, Mahindra & Mahindra, Hero MotoCorp, Royal Enfield, Force Motors, Hitachi, Crompton, Orient, Havells. These are all their clients. And one advantage with this company is that this company has provided better return than Asian Paint. And why is that? The reason is because it has been able to grow its profit at a much faster rate than Asian Paint, because it's a smaller company compared to Asian Paint. So now I'm at the financials for Berger Paint, and we look at last 5-year data. So from March 2018, the sales has been increasing. It was 5100 in March 2018, then 6000, then 6300, then 6800, then 8700, and now for the 12 trailing months it is around 10,000. So there is no problem in the revenues as such. And if I look at the profit in 2018 was 807 crore, then 935, then 1000 crores, then 1182, then 1300, and now for the 12 trailing months it is around 1500. So in the profit also you'll see that there was no dip. Although in Asian Paint you saw that for 2 years the profit was almost flat because of the dip in the OPM, but this company has been able to maintain its profit. And you can see that in March 2018 its OPM was 15%, which increased to 17, but now again because of the high input cost pressure, the OPM has come down to 15% in this company as well, which again is a temporary problem. As I said earlier, within the period of 2 years, 3 years, these companies will bounce back again. Why? Because there is nothing wrong with their business. You can see the sales is increasing at a very good rate. It's only because of the high material cost, high expenses, that the profit has reduced, and these companies know how to deal with these situations. They have dealt with these situations in the past, and they are going to deal with it in the future as well. As a shareholder, we just need to give them time. That is the only thing that these companies will ask from us. If we can give them time, they will surely give us returns. Now we are at the return profile, and you can see that sales growth has been very good. In the 12 trailing month, the sales have increased only, and the profit growth has also been very good in the double digit. Stock CAGR, if you'll see, in the 10 years it has given a CAGR return of 27%, and for Asian Paint it was around 22%, but for Berger Paint 10-year CAGR has been around 27, which is more than the market leader Asian Paint. But the 5-year return, 3-year return, and 1-year return have dipped a little bit. Why? Because of these recent challenges. But I'm sure this company is going to recover from that. And the return on equity also, you can see it's in the double digits. Now we are at the chart for Berger Paint, and this company went till around 850 levels, and from there it went down till 550, and from there it went up, and after that it went down again. But at this time it started taking support at around 600 level, and right now again this company is available at around 600 level, which is a discount of 25% from its top. So compared to Asian Paint, the discount in Berger Paint is right now more. In Asian Paint it is 14.8%, and in Berger Paint it is around 25.27%. And both these companies are very good companies in the long run. They have given very good returns to its shareholder, and there is no doubt why they cannot deliver the same in the coming future as well, because their business is still doing very well and the sales are increasing at a very healthy rate. You can do your own study on these two shares, and you can invest in either both these company or invest in either of them. So that's it in this video. If you like the video, then do hit the like and subscribe button, or if you have any suggestion, then please feel free to mention it in the comment box. Thank you.